Next up is RSI, or Relative Strength Index. There. Relative Strength Index usually looks like this. So for Relative Strength Index, it basically just sees where the stock is moving and by how much. And when the stock is moving downwards, it moved here downwards, the Relative Strength Index value moves lower. It moved downwards here too, and here too it moved lower. Here was a small up day, so it moved very, very slightly higher. A down day, lower. A down day, lower. I don't know how. Well, the price closed higher than the previous day, so that wasn't technically an up day. A big down day, lower. A small up day, higher. Sorry, actually lower because it closed lower. This closed higher, so the direction of the movement was higher, so that's why this climbed. And that's how it basically works. Then there are some levels. 30 level is usually considered as oversold, so there has been a lot of selling already on this stock here, so it starts to be a time to start looking for a bounce, maybe. Who knows? Well, here there's a bounce, and the RSI climbs for a short time above that 30 level, but doesn't stay there. Here it starts staying above that level, so somebody would think that maybe I'll take a long trade from here. Also, there is some kind of like support pattern found. It bounced off the support, so take a long, and whew, there we go. The same works kind of for the other direction, but here's actually a wonderful example. A stock can be overbought for a very, very long time. The fact that it's overbought doesn't mean that short is stock. It just means that there's a lot of buying pressure on the stock. It was going higher, 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 higher. It doesn't care if it's overbought. It doesn't care that it's overbought. It's still being bought. Except at some point, the RSI starts falling lower. Actually, that comes from the price. The price starts falling lower, often enough so that the RSI falls lower enough to come back down from the 70 level. By the way, the maximum RSI is 100 and the minimum is 0. It's that kind of normalized indicator, or limited values. And finally it falls a bit. I don't know, I don't trade based on this one, but I use this more as a warning light. So for me, if this is below the 30 level or something like that, I don't feel like shorting this anymore, because there are so many people shorting this already. Somewhere around this level, I would feel like shorting this, because it's in a downtrend, you see, without drawing any averages. A human eye can see that it's going down, right? So I wouldn't mind taking, there was a top, it tried to break above that. It makes another attempt to break above that level and it fails. It falls, and there was the previous big green candle. Now it falls lower than that. Maybe I would feel like taking a short in here. And as it falls to the oversold levels, I'm not going to short anymore in here, but I can still hold on to my short for as long as the price keeps going lower. But since here it goes no more any lower, it does nothing, especially option trades. I should take them off already when the price is no more falling, because now the theta decay is just causing me pain. If I didn't sell call credit spreads from above this level when I saw that it failed, I could have sold some a call credit spread from here and just like enjoy the theta that is coming into my account for this moving forwards and then doing nothing. Sorry, moving downwards and then doing nothing. Also here, this was not a massively good bounce to trade to the upside. There was an oversold reading, yeah, sure. If you trade this up here, nothing. You lost. Here it was more oversold. It was already at the 20 level. So that's, I don't know, maybe that works better, who knows. There was an overbought, which didn't last for a long time. there, I just use it as a warning light basically. So shorting at this point when it's oversold, I don't do that. But when it does the kind of bounce and fails, it's no longer oversold, so I wouldn't feel bad shorting this thing here. Because now it's trying to go higher and it's failing. It's starting to go lower again. Maybe take a short somewhere in here. It's not oversold yet. And boom. But shorting it here, once it's already that much oversold at 25, I wouldn't do that. So once more, this is a warning light for me. This is not something I use for trade triggers. Here again, a very, very long time overbought. It's a warning light for long trades, at least on some level. But still, there would have been many very good long trades to be had. But it's something to be aware of. Something to be aware of anyway. Also, just showing you Nasdaq, which has been on a big run up to recently. Actually not. Here there was a bigger, but this is already a warning light for Nasdaq. Maybe don't buy Nasdaq up here. It's really, really high. Here it's above 50, so above the center point. It's finding some support, consolidating under highs, and then it starts to move higher. So since there is no warning light on this one yet, I wouldn't mind buying it here. I would no longer buy Nasdaq up here. I could still short Nasdaq here. But once it goes below this level, I would not feel like shorting Nasdaq anymore. So that's that for RSI.